Guys, today I will be sharing with you an easy turtle soup strategy that you guys can implement into your trading plan. Hopefully, this will allow you to improve your trading, maybe improve your win rate, and maybe you will be able to find consistency a little bit more quickly. So, I also have a free Discord. The link is in the description. I share all the trades that I'm taking with you guys, absolutely free. I share all of my analysis with you guys, my key levels, and what I'm looking at for that specific day. So let's get into the video. Now we're currently looking at the euro dollar on the 1 hour time frame. It's not often that I use the 1 hour time frame, but for this video, it makes sense, and you'll understand why the 15-minute time frame is too spread out. So first of all, as you can see here, we have this. Actually, we'll denote the range first. You can see we are trading between obviously this high and this low. So if we denote our range, we will see that we are trading in a premium, trading into a point of interest that is located within the top 30% of the trading range. You guys know, if you've been watching my channel for a while, that I love these order blocks, these points of interest that are located within the top 30%. It means that, or usually it will make your strike rate a lot better. Your trades will just tend to run more easily and with more aggression because you're trading from either a very, very premium price or a very, very discounted price. So now I can delete the range as we've denoted that, and we can start dropping down to the 15-minute time frame. Now, an important point to note is the time that you are trading, right? We like time and price. So if I denote 7 to, let's do 11 for New York kill zone, we would not be looking to take this entry here because it comes before the kill zone. Okay, so this I would be looking at as buy side liquidity for a turtle soup setup. We have a swing high formed, which is potentially going to be inducing traders to be buying. We have a break of structure here. They will be thinking bullish trend. However, we understand the higher time frame picture that we are trading from a premium price of a higher time frame leg. We understand our trading time, so we would not be looking to take an entry here. Now, price comes up, we turtle soup, we run buy side liquidity, and look at the aggression at which we come back into the range. Yes, we close outside of the range, but that next candle closes back at the previous candle's open. So does this indicate to you that it's a strong break of structure? I would personally say no. Now, the 15-minute time frame, you can take the entry as is here. It's during a kill zone. We've had the change in state of delivery. We've closed at the open of the previous candle. So we can take a short position here. And we need to find a low-hanging fruit target objective. And what do you see here? Well, first of all, if you notice here, we have equal lows stacked here. So we can have this as our sell side liquidity for our take profit, which will give us a nice 5.5 hour trade. And if we play price on, you can see we get a nice reaction and boom, straight to take profit. So this is the 15-minute entry. I can also show you the 5-minute entry if you prefer to, trade the 5-minute time frame with a little bit more confirmation. If we now drop down to the 5-minute, you can see we get the turtle soup. And if we play price on, what we are looking for is potentially an order block. Oh, that's too far. We're looking for an order block to form. We're looking for a couple of confluences. An order block, potentially a fair value gap, potentially a balanced price range. And in this example, we have all three. We have our 5M change in state of delivery here, which gives us a valid order block to trade from. As you can see here, this would be our 5M order block. We also have a fair value gap here, which I'll just leave, put this in a different color. Let's do fair value gap here. We've also got an inversion fair value gap here. And if you notice, this gives us a balanced price range, BPR. Why does it give us a balanced price range? Because if you look, we have an aggressive move up with a fair value gap here, and we have an aggressive move down with a fair value gap here. So this range is balanced. This range is efficient. It's delivered the buy side here, and then we immediately delivered the sell side again here, both with aggression. So what we want to see ideally is the bodies of the candles respecting this area. Yes, it can wick up a little bit higher, obviously into this extreme 5M order block, but ideally we want to see the bodies of the candles respecting this balanced price range, and we can set our order either on here on the EQ. Let's do the EQ, and we can cover the order block up here, giving us around about 6 pip stop loss. And you can see we wick up into the extreme 5-minute, and then we start to trade down. So we would have been tagged in here, and notice the bodies of the candles are respecting the equilibrium point of this balanced price range. And again, we can have our take profit. If you're not comfortable holding for a long time, you can just take 4R down here, or if you wanted, you could target, as previously denoted, the relative equal lows here, giving us around about a 10R trade. So I hope that you understood this video and that you understand what a turtle soup is. It's basically a run on a high in the opposing direction to the higher time frame order flow, which is basically inducing traders onto the wrong side of the market, thinking that it's a break in structure when really it's just a liquidity grab, and we can then take that opposing trade. The link is in the description for my free Discord. Come and jump in, say hello, and I'd love to help you learn trade.